Welcome to Explain the Charts, where we break down complex market movements into actionable insights. Today, July 22nd, 2025, we're putting Apple, ticker Apple, under the microscope, combining recent news with an in-depth chart analysis. The headlines are certainly buzzing. Apple just launched its online retail store in Saudi Arabia today, signaling expansion. However, there's also news from Yahoo Finance suggesting critics are calling for CEO Tim Cook to step down, raising questions about Apple's future direction. UBS maintained an unchanged price target of $210, citing shifts in iPhone demand, which is a key concern for investors. Adding to the mixed signals, we've seen reports that Warren Buffett has been selling Apple stock, opting for investments with higher yields, a move that often sends ripples through the market. Yet, on the flip side, Chartmill.com recently identified Apple as a quality stock worth considering for long-term investors. These conflicting narratives create an intriguing backdrop for our technical analysis. Let's start by looking at the daily chart to get a broad overview of AAPL's performance over the past year. On the one-day chart, stretching from March 2024 to yesterday's close on July 21st, 2025, we can observe a clear overall uptrend despite periods of significant volatility, showing higher highs and higher lows for much of this period. The price started around $170 in March 2024 and steadily climbed, reaching new highs. Notice the sharp surge in June 2024, from approximately $190 to over $213, indicated by strong green candles with high volume. This strong move likely coincided with positive news, perhaps around their AI announcements, demonstrating significant institutional buying interest. A critical period to highlight is early April 2025, where we saw a rapid decline from around $225 down to the $170 level in just a few trading days. This drastic drop, characterized by multiple large red candles, aligns with the news of iPhone demand shift and critics calling for Cook to step down, suggesting a direct correlation between bearish sentiment and significant price action. The volume during this decline was notably high, indicating strong selling pressure and a capitulation-like event. However, following this steep decline, specifically on April 9, 2025, we witnessed a powerful bullish engulfing candle around the $170 price level, accompanied by extremely high volume, marking a significant and forceful reversal. This $170 level has historically acted as a strong support, as seen earlier in March 2024, reinforcing its importance as a key price floor. Since that April low, Apple has been in a recovery phase, gradually climbing back towards its previous highs. The area around $230 to $235, seen as peaks in July, August, September 2024, and January 2025, has consistently acted as a major resistance zone. For a sustained long-term bullish trend, Apple needs to decisively break above this $235 resistance. Now, let's zoom into the one-hour chart to analyze the more recent price action within July 2025. This timeframe gives us a clearer picture of intraday movements and short-term trends. We can see a notable upward push at the beginning of July, with the price jumping from around $209 to $213, showing initial bullish momentum. However, following this initial surge, the price entered a period of consolidation and minor pullbacks. There was a dip around July 7th to approximately $208, which quickly found support and rebounded. This suggests that the $208 to $210 range is currently acting as a short-term support level on the hourly chart. The price has mostly traded within the $208 to $215 range throughout the first half of July. The volume on these hourly candles helps us gauge the strength of these moves. Higher volume on green candles, like those seen early in the month, indicates strong buying interest, while higher volume on red candles suggests increased selling pressure. This recent consolidation suggests a battle between buyers and sellers, waiting for a catalyst to break out. Let's get even closer and examine the 15-minute chart, focusing on yesterday's trading session, July 21st, 2025. This granular view reveals the very immediate momentum leading into today. Throughout most of yesterday, Apple traded relatively flat in a tight range, generally between $210 and $211. However, a significant shift occurred in the afternoon, starting around 13:25 Universal Time Coordinated. We observed a strong bullish push, with the price rallying from approximately $212.50 to reach yesterday's high of $215.78, confirming the daily candle's peak. This late-day rally on the 15-minute chart, supported by increasing volume, indicates strong buying interest emerging right before the market closed yesterday. This contrasts sharply with the recent UBS price target of $210, suggesting that market participants may be shrugging off analyst downgrades. The presence of several large green candles, with minimal wicks on the bottom, suggests strong buyer control during this specific period. This short-term momentum could carry over into today's trading session. To recap, let's consolidate the important price levels and considerations for Apple. On the macro level, the long-term support remains strong at around $170, a critical floor if a major downturn occurs. The primary long-term resistance is identified between $230 and $235, a level Apple has struggled to break through consistently. In the short to medium term, immediate resistance is forming around the $215 to $216 mark, based on recent highs seen yesterday. Conversely, immediate support levels are found around $208 to $210, a zone that has held firm on the hourly charts recently. Reasons to be bullish include the robust rebound from the April 2025 lows, the overall uptrend on the daily chart, and positive sentiment like Chartmill's quality stock rating. Short-term bullishness is reinforced by the strong late-day buying action on July 21st, suggesting renewed interest despite recent analyst reports. However, reasons to be bearish stem from concerns about slowing iPhone demand, particularly given UBS's $210 price target and persistent questions about innovation and leadership, echoed by calls for Tim Cook to step down. Warren Buffett's selling adds a layer of caution from a value investing perspective. An unbiased prediction for the short term suggests a 60% likelihood that Apple tests and potentially breaks above the $215 to $216 resistance. This would be reinforced by sustained high volume on green candles and positive news, possibly related to upcoming product announcements or better-than-expected earnings. If it breaks, we could see a move towards $220 to $225 and potentially retesting the $230 major resistance. Conversely, there's a 40% chance Apple pulls back to the $208 to $210 support zone. This scenario would be reinforced by a break below yesterday's low with increasing bearish volume or significant negative headlines regarding iPhone sales or regulatory pressures. Should $208 to $210 fail, the next key level to watch would be $200, which has previously served as a psychological support. Long-term, breaching the $235 resistance would signal a strong continuation of the uptrend with a 70% likelihood if Apple unveils groundbreaking innovation, especially in AI integration, and demonstrates improved demand outlooks in key international markets. Conversely, a sustained failure to break $235 and a drop below $200 would suggest a longer-term bearish shift with a 30% likelihood, particularly if competition intensifies further and no significant new growth drivers emerge to excite the market. Keep a close eye on upcoming earnings reports, new product reveals, and changes in analyst sentiment. These events will be crucial in determining AAPL's next major move. Thank you for tuning in to Explain the Charts. We hope this deep dive into Apple helps you make more informed trading decisions.